Good morning and welcome to the Dong Report. We're going to cover Berkshire Hathaway's earnings. We're going to talk about why Amazon stock is plunging. And then we're going to make fun of Goldman Sachs for a disastrous copper call. So let's get right into checking out Berkshire Hathaway, our favorite Warren Buffett company. So we'll start with the balance sheet here. I know we're going to dig into a lot of numbers. You're going to be bored because you just like vertical lines, but that's okay. So this is Berkshire Hathaway's balance sheet. Let's do some comparative balance sheet analysis. So for the most recent quarter, ended June 30th, 2025, Berkshire Hathaway has $96 billion of cash. That's in comparison to $44 billion in cash in December 31st, 2024. So they've definitely plussed up their cash by about $52 billion. And I think a lot of that came from their short-term investments and UST bills. So in December 31st, they had $286 billion in short-term U.S. treasuries, and that dropped to $243 billion for June 30th, 2025. So they got some cash. They have more liquidity. Not sure what they're going to do with that. Maybe they're going to potentially buy more stocks, but they've definitely plussed up their cash and cash equivalents. Might be making some moves here pretty soon. Investments in fixed maturity securities. This is like probably longer term bonds, roughly about $15 billion. So if you add up their cash and their short term investments, let me do the math here. Oops, sorry, my calculator's freaking out. 96,193 plus 243,605. They have $339 billion of cash, basically, on their balance sheet. That's a lot of money. And remember, this company's market capitalization is $1 trillion approximately. All right, investments in equity securities. So this is their stonks, okay? They have $267 billion in stonk. This is a slight drop from 271 in December 31st, 2024. Equity method investment. So an equity method investment is where you own between 20% to 50% of the business, and you record the underlying company's profits as income on your income statement, and you adjust the balance sheet account. So their equity method investments have actually dropped. In December 31st, 2024, it was $31 billion and it dropped to $25 billion. Not sure if they divested or if some of their investments actually lost some money. We'll see, but that's actually a pretty significant decline, roughly 1/6. Loans and finance receivables up a little bit to $28 billion. Other receivables, $47 billion. Inventories, roughly the same at $24 billion. Property, plant, and equipment, $30 billion. No major change there. Equipment held for lease, $18 billion. No major changes. Goodwill has gone up to $57 billion. That's usually an indicator that they made an acquisition. A goodwill is just a plug on an accounting entry where if you pay more for a company than the fair value of its net assets, you have to plug in goodwill as the difference because otherwise the equation won't balance. But it's a intangible asset and it is not amortized. So usually when you see changes in goodwill, that's either because of a new acquisition, and sometimes foreign currency translation effects can affect that. But if you see goodwill go down precipitously, that's called an impairment or a write-down. So pay attention to that. But it's actually a very small percentage of their assets. Their total goodwill is $57 billion on $922 billion of assets. The vast majority of their assets are cash, cash equivalents, and stocks. That's more than half of their assets. Okay. Let's see. Railroad, utilities, and energy. Much lower cash balance of $4.2 billion. Receivables of $4.3 billion. Property, plant, and equipment. They're definitely making investments in railroad and energy. Property, plant, and equipment is $179 billion. Goodwill, small change, could have been an acquisition. Regulatory assets, slight dip, and then other. So pretty solid asset side of the balance sheet. Let's look at the losses. So they have insurance, unpaid losses, and loss adjustment expenses. Let's see. Unearned premiums. Try to see if there's anything major for the asset or the liability side. Payable for purchases of UST bills. So that's zeroed out from $12 billion. Let's see. Yeah, no major changes on the short side, or the short-term side of the liabilities. They, for railroads, utilities, and energy, they had a slight increase in notes payable and other borrowings. They borrowed about $2 billion. Let's see. And then let's look at common stock. So no major change in common stock. The capital in excess of par value has gone down a little bit. Accumulated other comprehensive income. So these are profit and loss items that basically skip the income statement. They're on the statement of comprehensive income, but they skip the income statement. The actual like EPS. You're not going to see these adjustments in EPS. But they're for very specific things like foreign currency translation adjustments, derivative cash flow hedges, stuff like that. So you'll see fluctuations in that account, but just know that those changes skip the income statement. They're on the statement of comprehensive income, and they're very special items. Retained earnings has gone up. That means they had a profit. And treasury stock, no change. So I don't see any buybacks. Did we not do any buybacks over the last 6 months? That's interesting. I thought Berkshire was, I guess Warren Buffett or whoever's in charge now thinks the stock is probably a little expensive because there were no buybacks in the last 6 months. Okay, so let's see. Total liabilities of $493 billion on total assets of $1.16 trillion. Yes, they have $1.16 trillion of freaking assets. Wow. So their price to book is pretty low. So it's $1 trillion company, and the book value of this company is $670 billion. So their price to book is like what? 1,000 roughly divided by 670. 1.5. Okay, pretty cheap, bruh. All right, revenues, consolidated statement of earnings. So for insurance revenues, insurance premiums have gotten up a little bit. I actually would think insurance premiums would go up more because hasn't insurance been like going freaking crazy? So year over year, insurance premiums are up 1%. Sales and service revenues are actually down. Let's see. Sales and service revenues are down about 4.5%. Leasing revenues are up about 8%. And then interest, dividends, and other are up about 13.5%. Okay. So basically tepid growth in insurance, a little bit of drop in sales and service revenues, leasing revenues up a tiny bit, but they're very small. And then a decent increase in dividend interest and other investment income. For the railroads, freight rail transportation revenues are completely flat. They generated $5.7 billion in freight rail transportation revenues, and that was basically what they had last year. Utility and energy operation revenues up very slightly, probably less than 1%. Yep, up 0.2%. And then service revenues, other income are down about, kind of lame revenue growth, I'm not going to lie, are down about 9%. So total revenues for the company are actually down slightly. They are down by approximately 1 and some change percent. And then investment gains or losses are also down pretty significantly too. For this quarter last year, they had $23 billion of investment gains. And this quarter they had $6.3 billion. Okay. Insurance losses basically flat at $14 billion. Life, annuity, and health benefits expenses actually up. So I guess they had a surge in like payments for life insurance, annuities, and health. Let's see, that's up almost 19%. Insurance underwriting expenses are up 10%. Cost of sales and services are down probably about 10%. Let's see. So their total expenses grew by basically flat. So their revenues are declining very slightly, and their insurance expenses are actually slightly climbing. Railroads, they were able to cut railroad expenses. So they cut freight rail transportation expenses by a couple percentage points. Utility and energy cost of sales are down by a couple percentage points. Other expenses down, and interest expense is actually up. So interest expense was $935 million, up about 4.5%. So total railroad, utility, and energy costs are down very slightly. Earnings before income taxes and equity method earnings. So their earnings actually got a huge cut. Earnings are down. Let's see, 37. Almost 50%. Woo! What's going on here, Berkshire? They recorded losses on equity method earnings. So remember what I said on their balance sheet when they're when you see, where's the balance sheet at? So when you see equity method investments go down, that means the underlying companies that they have between 20 to 50% ownership in, they've recorded losses on those. So overall, I'm not the greatest quarter for Berkshire Hathaway here. Okay. Net earnings are down pretty precipitously. So they're getting hit pretty hard. Their net earnings are down. Woo, 60%? Yeah, almost 60%. Damn. Earnings per share is down. Yeah, 59%. Ouch. Not the best quarter. And they've actually issued some shares. Look at that. So normally Berkshire, you think of, oh, he buys back when he thinks it's cheap. They've actually had a slight increase in shares outstanding for both Class A and Class B shares. Mamma mia. All right, here's their statement of comprehensive income. So you've got net earnings on the top, and then you have these other adjustments here. These are income and expense items that skip the income statement and go directly to the balance sheet on the account called other comprehensive income, accumulated other comprehensive income. So these numbers right here skip the income statement. So let's see what's going on here. Unrealized gains or losses on investments, foreign currency translation. So the vast majority of the change was foreign currency, a 1.1 billion hit on, or it looks like a gain from foreign currency translations. Okay, that's the big one on the statement of comprehensive income. Let's go look at the statement of cash flows. So, yeah, for the first 6 months of 2024, they had some serious gains in investments. So that's when you see wild fluctuations. Investment gains and losses for 2024 in the first 6 months, the gain was $25 billion. Now they had a loss of 71 for the first 6 months of 2025. That's pretty significant. Depreciation's up a little bit, but nothing crazy. Discount accretion on investments, T-bills, they had a gain of approximately 6.1, but that's a non-cash gain. And then other. I don't know what these other expenses are. I wish they would tell us. But they had other non-cash expenses of $7.8 billion. That's a lot. That really hit their earnings. All right, so their cash flows from operations are actually down. Are down about 13%. Let's see what they did for investments. Okay, they're mostly plowing money into T-bills. And they spent about $9 billion on property, plant, and equipment. So most of their investment transactions were just selling securities. And they also purchased some equity investments. So they purchased about $7 billion of equity securities, stocks, basically. And then for financing activities, okay, we see some borrowing, but we don't see any buybacks of stocks. So I guess that's the company telling you it might be a little pricey. Uh-oh. So overall, not the best quarter for Berkshire Hathaway. I don't know what's going on here, but things ain't looking too pretty for this quarter. But I'm sure that was expected because the company didn't really sell off. I mean, let's look at the past. Okay, the past 5 days is down 2%. Past month, it's down 2%. Year to date, it's up 4%. So it's been trailing the stock market year to date. In the past year, it's trailing the stock market. And then over the past 5 years, I believe it's beaten the stock market. So a little bit of a sell-off, but the market isn't pricing in catastrophe. It's got a trailing PE of 12 and a forward PE of 22. Interesting stuff right there. Okay. Let's look at some valuation metrics. So price to sales, it's on the more expensive side, at least over the past 5 years. Price to books, it's at all-time highs. Price to tangible book value at all-time highs. Price to free cash flow, huge freaking jump. Price to operating cash flow, also huge, pretty. I can see why he's probably not buying back shares. Interesting. All right, return on equity has gone down a little bit to 13.19%. So all their profitability metrics are down. Their valuation metrics are up. Their earnings have taken a huge hit this quarter if you compare it to year over year. Interesting. Let's go look at their revenue over time. So revenue's kind of flatlined over the past couple of years. Operating income has been trending down over the past couple of years. And net income has also been trending down. Free cash flow per share has taken a huge freaking hit. Margins going down. Everything's trending down. What's going on, Berkshire? Free cash flow margin 3.25%. I don't know. I don't know what's going on here. Interesting stuff. So not the best quarter for Berkshire Hathaway. I wonder if Occidental Petroleum was hurting them, because I know they were buying Oxy. Hasn't oil been lagging this year? Let's see. Year to date, Oxy's down 12%. That could have hit their earnings. What is Oxy's profits? Quarterly profits of Oxy. Okay, not too bad. So that actually would have helped them a little bit. I wonder what companies hurt them. So they own American Express, Occidental Petroleum. Let's look at their equity method investments. Berkshire subsidiaries hold investments that are accounted for in the equity method. The most significant of our investments is the Kraft Heinz Company and Occidental. They own 27% of Kraft Heinz and 28% of Occidental common stock. Okay. We own a 50% interest in Berkshire Commercial Mortgage, LLC. Jefferies Financial Group owns the other 50%. Let's see. Our investments are summarized as follows. So they had a huge write-down in Kraft Heinz and a small write-down in Occidental. So the way it works is when they get a profit, when the company they own gets a profit, it gets written up on their balance sheet. If it has a loss, it gets written down. And then if they receive dividends, it also gets written down because you're getting some of your investment back. So the biggest hit was Kraft Heinz. With Occidental, they were posting a profit, but because of the dividends, they probably had to write down the account. And then Berkshire, really no change there. Kraft Heinz must have got cooked. What's happening to old Kraft Heinzy? Let's look at their profits. Yep. Kraft Heinz had a huge, that is what hit Berkshire Hathaway. Kraft Heinz. Man, I'm such a genius. Jeez, I can find this stuff so quickly. Yeah. Kraft Heinz got cooked. An impairment of $6.6 billion of goodwill and an asset write-down of $2.5 billion. Yeah, this is what helped cook Berkshire Hathaway for these most recent. This is definitely part of it. Damn. Brutal. So Kraft Heinz isn't doing too well. Yeah, look. Oh, damn. Nasty, savage. All right. I'm just looking at other. You can always go below the financial statements to see more details here. But yeah, very, very not a good quarter. And a huge part of that was Kraft Heinz just getting absolutely cooked. So not too hot for Berkshire Hathaway. All right, let's move on to Amazon. So Amazon stock is dropping. People are freaking out, bro. Let's go look at Amazon, see what's cooking with Amazon. So they posted their earnings, and I covered them in another video. And I think the big issue was that they gave a very broad band of guidance for their operating income for the next quarter. I think it was like a $5 billion variance in operating income, which is a pretty crazy, guide. Amazon's revenue continues to grow. Gross profit continues to explode. Operating income, this actually pops up, steadily going up. Now with Amazon, the impressive thing is, so before AWS was like the huge majority of their operating income, but now they're US based business, like Amazon itself, Prime, all that stuff. That's actually seen a huge increase in operating income as well. And international, I think actually 3 or 5x their operating income. So every segment of their business, if I'm remembering properly, is profitable. And it's not just AWS carrying everything. So they've been doing pretty well. I mean, look at that increase in operating income. You can see why the freaking stock has gone up ever since the popping of the clown market bubble. Huge freaking sell-off all the way down to 85, and then a huge freaking rally afterwards. So let's look at their valuations, bro. Let's see, ratios. So PE's trending down, forward PE's trending down, price to sales within the normal band, price to books going down, tangible book value going down, price to free cash flow 169. Why is that? Well, they're making massive investments. There was a time when I think they slowed down their investments, but now they're getting right back into making more investments. It's like they're just going to invest into infinity. Price to operating cash flow within the normal level for the last couple of years. PEG ratio, normal level. Let's see. Let me double check. I'm pretty sure they made huge investments. So look at these capital expenditures here. The biggest investment so far in the last 5 years. They sunk $32 billion in capital expenditures for Q2 of 2025. Which will hopefully pay off in profits in the future. They also had about $1.7 billion of acquisitions. So let's read this article and see why Wall Street's freaking out. Amazon stock sinks 8% after earnings. Amazon boosted its annual target for AI spending as it frantically builds out more data centers to meet demand for technology, as we saw. Revenue expansion in AWS underwhelmed, who probed Amazon CEO on why its cloud rivals are growing at faster rates. Well, how much market share does AWS have? If they're the leader, they're probably not going to be growing as fast. The second quarter results showed Amazon is navigating President Trump's shifting tariff policies better than Wall Street feared. All right, here's the CEO, Andy Jassy. Amazon on Thursday reported second quarter earnings that beat expectations on most metrics, but the results weren't good enough to please Wall Street. Amazon stock slid following the release and throughout the conference call. Shares closed down 8%. The stock is roughly down 2% year to date. Profit guidance was weaker than expected, while cloud growth underwhelmed investors. And like I said, their profit guidance, very broad. That overshadowed an otherwise upbeat report that included strong revenue and profits, steady retail growth, and a 23% in advertising sales increase. Amazon also offered a rosy revenue forecast for the current quarter. I mean, I don't think this is a big deal. You know, if you're a long-term Amazon investor, wouldn't be too concerned about this. Amazon reported that it spent $31 billion on capital expenses, and the company expects that to be reasonably representative of its spending in the second half of the year. They are plowing money. In the first quarter, Amazon's capital expenditures exceeded $24 billion. Amazon God, how much money do you think? They've probably spent $1 trillion over their history in freaking capital expenditures. Let's look at the annual. Okay, we go to the statement. How much have they spent in capital? They are just plowing money. Okay. So in the trailing 12 months, they spent $107 billion. And then 2024 is a mix of both. But in 2024, they spent $82 billion on capital expenditures, 52 in 2023, 63 in 2022, 61 in 2021, and 40. I bet you they're going to easily cross $1 trillion in capital expenditures. Good God. Forever growth, bro. Taken forever, it means that Amazon could spend upwards of $118 billion on capital expenditures this year, up from its previous forecast of $100 billion. Yeah, but the thing is, it's all about whether these pay off. That's the whole purpose of capital expenditure. You're making investments in the business. You're not returning the capital to shareholders. You're keeping it in the business because you think you can invest it and make more money in the future. Amazon's CapEx, which hit $83 billion a year ago, is primarily going towards building out tech infrastructure to support AI demand. Amazon's competitors are also throwing big money at AI. It's basically supporting the whole frickin' economy. AI investment. On Wednesday, Meta lifted its forecast for capital spending to the range of 66 to 72 billion. Google raised its capital spend to 85 billion. That's why freaking Nvidia is flying like a freaking rocket. Because, of course, a lot of these capital expenditures are going to be going to freaking Nvidia. I mean, year to date, it's up 29%, and it's up 48% on the year. The question on investors' minds is when these big AI bets will begin to pay off in revenue or profit. I don't know. Amazon CEO, and that's how the bubble would pop, is if they did not pan out. That would destroy a lot of these companies, at least in the short term. Amazon CEO Andy Jassy hinted the company's progress on AI has improved its operational efficiency and business growth, but offered few specifics beyond that. Oh, like how? Don't they have they have like a chat bot on their Amazon website? Wow. I don't use it at all. Amazon has also previously said that generative AI is contributing revenue to AWS at an annualized rate equivalent to multiple billions of dollars. On a conference call with investors, Jassy pointed to Alexa Plus, an upgraded version of its digital assistant, as a way it can monetize AI. The service, which launched in early access, is $19.99 a month or free for Prime members. What does Alexa Plus do? Does it spy on you more? I think over time, you could also imagine, as we keep adding functionality, that there could be some sort of subscription element beyond what there is today. Jassy reiterated that it's very early days in AI development and adoption. Cloud rivals. Amazon Web Services continues to lead the cloud infrastructure market, but it's facing steeper competition from Microsoft Azure and Google Cloud, which posted stronger growth rates in their latest quarterly results. Yeah, but like I said, if it's the leader in the market, if you're the biggest player, you're probably not going to be growing as fast. Amazon Web Services grew its revenue at 18% year over year. Still pretty impressive, which beat Wall Street's estimates. That trailed the big gains reported by Microsoft and Alphabet at 39% and 32%. Good God. Insane. All right. So let's see what this Morgan Stanley analyst has to say. There is a Wall Street finance person narrative right now that AWS is falling behind in generative AI with concerns about share losses to peers, etc. All right, so that's the concern, okay? The growth is fine. It's just market share they're worried about. JP Morgan analyst Doug Ammuth said there's been significantly faster cloud growth among number 2 and number 3 players in the space. You mean the small companies are growing faster, bro? Jassy said sometimes the company is growing faster than rivals and vice versa, but AWS still has meaningful, larger cloud business. I think the second player is about 65% of the size of AWS. Jassy also appeared to take a swipe at Microsoft over a recent worldwide attack on its SharePoint collaboration software, saying AWS customers see a very big difference in security. You could just look at what's happening the past couple months, and you can just see kinds of adventures of some of these players almost every month. The comments failed to sway in, but Jassy, you got to learn to pump like Elon Musk, man. Oh, AI, we're going to colonize Jupiter. Bernstein analyst said that Friday the tone wasn't great, and Amazon's explanation for its competitive positioning and trajectory sounded less constructive than peers. Words matter, but numbers matter more. Tariff risk better than feared. In May, Amazon warned it was bracing for potential uncertainty ahead of Trump's tariff and trade policies. You cannot predict what Trump's going to do. It's impossible. Don't even waste your time. At the time, products imported for China were subject to a steep 145% levy, and then Trump tacoed. Now, China's facing a 30% tariff rate. Amazon's latest earnings show the company seems to be navigating the tariffs and shifting trade policies better than Wall Street. Yeah, they'd probably get a bunch of exceptions from Geodis because, they're all... Geodis is bought and paid for. Give me money! Fluff me! Oh, you're amazing. But yeah, their earnings were strong for both their domestic and international segments. Sales in its online store topped analyst projections and grew 11%, while seller services revenue also beat expectations. And you can't discount these. I mean, AWS is still a big part of their operating income, but they're definitely growing it with the other segments of their business too. The number of items sold in Amazon's online and physical stores jumped 12%, indicating the consumer remains healthy. Amazon third quarter sales forecast, which implies 13% growth at the high end, suggested tariffs appear to have been effectively absorbed by suppliers, merchants, and customers. What? Customers? You mean people that are buying it? That means they cost more and the customers are paying taxes? Interesting. They have an outperform rating on the company's shares. Jassy struck a positive but cautious tone on the call, saying it's hard to know where the tariffs will settle, especially when it comes to China. Yeah, you have no idea. We're unsure at this point who's going to end up absorbing these higher costs. Everybody's going to absorb them. The buyers, the suppliers, and the consumer. We're all absorbing it. That's why the Fed isn't cutting rates. A deal between the U.S. and China hasn't been finalized. And the two countries have until August 12th to receive a final agreement. So far, Amazon has weathered Trump's trade war. We just haven't seen diminishing demand, and we haven't seen any kind of broad-scale average selling prices increases. So that could change in the second half of the year. There are a lot of things we don't know, and that's what we've seen so far. Okay, so overall, I thought the earnings were pretty freaking good. But, Wall Street, there's always something. Some stocks sell off on earnings, some stocks vertical line on earnings. But, pretty good overall for the company. All right, last but not least, we're going to cover this hilarious story here. So once again, everybody is just making guesses about the future. Nobody knows what's going on. It's all guessing. It's all nonsense. It's all grift. Wall Street just wants you to give your money to them so they can management and charge fees. And in the long run, I believe they underperform the market if you look over a 30, 40, 50-year time horizon. Easily. Look at this. Goldman Sachs told clients to go long copper a day before the price plunge.
Bro, we're Goldman Sachs. We're an investment bank, bro. Look, you just need to buy copper right now, bro, because we did some analysis in our financial reports, bro.
And then the next day it crashes. Goldman Sachs salespeople were recommending their hedge fund clients bet on a surge in copper prices just a day before Trump's tariff decision sent the market crashing by the most on record. Why do we need to bet on copper? Why can't you just own the entire market and reinvest dividends? Why is this so hard for you people?
Hedge funds, bro.
Hedge funds are garbage. They suck. You hedge your wealth. You own a total world index and you own some treasuries. That's it. And if there's a multi-year bear market, you have treasuries. The 60-40, 70-30, 80-20 portfolio. That's all you freaking need, even if you're rich. At least that's my humble opinion. In a call with clients on Tuesday, Goldman argued that Trump was likely to go ahead with a 50% tariff on copper and recommended buying short-dated call options. It's just gambling. It's all gambling.
But we're Goldman Sachs, bro.
That would pay out if U.S. copper prices surged 11%, according to people familiar with the matter. In reality, the president imposed only a limited tariff. Taco trade, bro. Come on, Goldman. That exempted the main traded form of copper from duties altogether, causing prices to tumble 22%. Man, that should have been an easy call. He was going to chicken out. He always does. I don't even get mad about it. That evening, Goldman's commodity sales desk sent an email to clients entitled "No Copper Tariff, Mea Culpa." I forgot what that means.
Bro, but trust me, bro. Next time we'll do better, bro. Yeah, keep paying us our management fees, bro. Look at this other stock that went up a lot that we recommended, bro.
Such a grift. The misstep from one of the biggest and most respected banks in commodities highlights how the tariff announcement caught almost the entire copper market by surprise. Oh, yeah, because almost like you can't predict the future. But just shill your wins. You'll be fine. Several hedge funds and bank trading desks, including Goldman's, are nursing losses from Wednesday's price collapse. Those calls got annihilated, dude. Gone. Just there was zero. This is why you don't gamble.
Just ignore it, bro. Just don't talk about it anymore.
Several people familiar with the matter said the price plunge was double the previous record drop for the U.S. contracted data, going back to 1988. Other big banks were similarly blindsided, with Citigroup salespeople sending a message on Wednesday morning to clients saying that our trading desk like buying the ARB in copper. Such nonsense. But people like Chris Sain are definitely more informed than these investment banks. Trump had announced in early July that copper tariffs would be 50%, double the market expectations, but U.S. copper prices on COMEX had only risen to about 28%, almost like the market was potentially pricing in that maybe Trump was going to taco. While some clients fretted that there may be country-by-country exemptions to the tariffs after the U.S. signed a trade deal with Indonesia, a major copper producer, Goldman argued that the price spread between the two markets would rise. For
The price spread, bro. Gambling, bro. You can't buy VT and treasuries. That's too easy. We can't charge fees on that, bro.
In a summary of the Tuesday call that was emailed by Goldman salespeople to clients, the bank said that full 50% tariffs would result in a spread moving to 35 to 40%. Goldman suggested clients buy September calls with a 6.25 strike price, about 11% above the prevailing price at the time. Those calls got annihilated. The value of those options has plunged by more than 90%. Oh, man. Yeah. I'm the moron, though. VT is so stupid. So garbage.
Goldman Investment Bank.
The calls and emails from salespeople are separate from the notes published by Goldman's research team. Goldman's metal analysts had also predicted that there would be 50% tariffs on copper. You can't predict what Trump's going to do, except that he's going to taco. But he could do another tweet tomorrow. Ooh! But in a note on Monday, argued that minerals diplomacy could lead to exemptions and advocated taking profits on their earlier trade recommendation. What if I missed the memo? God, what a freaking joke. I'm telling you, it's all nonsense. If you don't understand this by now, you're a clown. It's all gambling. It's all freaking nonsense. All right, let's do some comments, and then I'm going for a freaking run. All right. Oh, I forgot to post my shilling for my business. But if you see the pinned comment below, I offer a variety of services: tax planning, bookkeeping, tax preparation, business or personal, any state in the United States. I got a free Discord if you want to join it. I do sponsored videos at $50 a pop and many more things. All right, member-only comments here. Ryu coin is up. Warren, not good. Warren has done all right, but he's a boring investor, bro.
I want to be entertained. I want to have fun.
A lot of investors are very feminine. Buffett basically owns diabetes factories. Does he? Oh, yeah, Coke. Look, you never drink normal Coke. Always drink Diet Coke. If you're going to choose, drink Diet Coke. That's my non-educated advice. The amount of sugar in Coke is awful. It's so bad for you. It's horrible. If you drink 3 Cokes a day, God, there's so many extra calories, and it's all pure sugar trash. Just pure fat. God. Anyway, thank you for the super chat. I appreciate it. Don't drink Coke. Buffett loves his Coca-Cola. He eats and drinks like a 6-year-old. I haven't had a Coke in years. Years. So bad for you. I drink Diet Coke sometimes. Love sees candies. The incentives to work with these companies requires an obedient normie. Create your own job, people. That's right. Self-employed. Why do you think I'm grinding on YouTube, covering these clowns at Goldman? Unless it pays well, a well-paid, obedient normie wagey. I mean, my job pays pretty good, but at some point I got to take the leap, you know? I mean, the only way I'll stay at my job now is if the economy just absolutely collapses in the next couple of months. Take your savings and try to get a side business. That's what I'm doing. I'm actually going to buy a new microphone. I'm going to invest in the sound quality. That'll be coming soon. Or buy index funds while you grind in existence in American communism. Yeah, I mean, I could definitely stay at my job and, you know, have so much money, so much more money in index funds. But at a certain point, it's like, do I have enough already? I think I've bought my freedom at this point. I think I can take the risk of self-employment. Make as much money as you can in a blue state, pays better, and retire in a red state. Or I just can't live in a blue state, dude. Just like the quality of life is so bad. I'm just surrounded by liberal douchebags. I can't do it. I mean, I live in a blue state, technically, but I live in a very red town. 80% red. Technically, America is economically fascist. Yeah, that's true. But it's not fascist in the sense that, because fascism is national socialism. And by nation, you should mean a people, like a certain ethnicity, basically. America doesn't care. We bring in whoever we can to juice corporate profits. So we're not purely fascist. Yes, great plan. I'm moving to Vegas. Are you going to go hang out with little Fufu? What the heck is Goldman Sachs doing? They all do this. They're all clowns.
Hedge funds, we gamble.
I would never, ever, ever give real money to a hedge fund. Ever. Imagine all this money I've saved. I'm like, oh yeah, here, take my money and gamble on commodities. No, never. All you need is VT and treasuries. That's all you need. Doesn't matter how rich you are. If you just do the opposite of Goldman mouthpiece, well, not. I'm sure they have some wins, but they have wins, they have losses, and on average, they probably underperform the market. Major minor. I'll probably do a red state in the Pacific Northwest or move to Thailand. I've got 2 friends that retired there with fat pensions, and they live like degenerates. Yeah, Thailand is not in the cards for me. My parents are 2 hours away. My kids live here. I own a home here. I'm not leaving Virginia. I'm in Virginia for a long, long time. Idaho is cool. That's too remote. Dan, all you can believe is in the... That's true. I 100% agree with you, man. I timed uranium nearly perfectly. Also timed even shorting natural gas perfectly. 100% accuracy for the year. Imagine if I made it. You should make a YouTube channel. I want to see your game, Gil. I want to see your game. And I want to see you make a YouTube channel. And I want you to be transparent with all your trades. I want to see your brokerage account. Everything. Open positions, closed positions. You got to be the honest trader. And if you take a loss, but you're honest about it, I can respect that. If you take a loss, but you're honest, I can respect that. What I don't respect is liars. What? He's richer than you. He's got a bigger house than you. Shut up, strong man. Yep. Idaho's my first choice. Spend lots of time there. I've never been to Idaho in my life. Not Dan Weston said he will debate me if I get 1K subs. No one, guys, you guys, I say this every stream. You guys can debate on my channel and I can print all the attendees, but it would be hilarious. It would be entertaining. Please, let's go. Debate on my channel. Not a member, but now you must say my name. 007 Clown. There you go. Thank you for your super chat. Like I said, if I don't know you, I either have to know you, or you have to be a member, or you have to super chat, or I'm not answering your comments. I'm sorry. Okay? Say my name. Say my name. Yeah. I already work for Strongman as a mod. That is true. Dan's my employee. I pay him $100,000 a year. Get a Shure mic. I'm thinking of getting the MV7, which is a couple $100. It's a Shure, but the higher tier Shure is like $500 for the mic, and then you got to have a boom arm. That's a couple $100 other bucks, and then you got to have this adapter. It comes out to like $700 or $800 for a freaking mic. It's like, holy, that's like ridiculous. But there's a Shure that's an MV7 that gets really high ratings, and it's only a couple $100. The main issue I have is it has a USB-C adapter or plug-in, and I don't think I have a USB-C on my desktop rig. So I'm wondering if I get an adapter to convert USB-C to the regular USB, if that's going to mess up the sound quality. I don't know. I got to do more research, but I'm looking at the MV7. It's like a couple $100. And I think that'll be a lot better than this mic. I was about to say that, fake alias. Get the pay pigs to buy your mic. Yeah, I made about just under 500 this month on YouTube from ad revenue, so that'll cover it. I'm printing tendies. Oh, baby, what's up? VT Treasury bonds and Dogecoin. I say this every time I talk. Why do you need to make it complicated? People like to feel like they're sophisticated. They like to feel like they're important. I just want enough money to survive without working, if I so choose. And the easiest way to do that is VT and treasuries. Why do we have to make our lives so complicated? I hate complication. I hate making things more complex than they need to be. Chris, thoughts on dividend dude only getting a return of 2.1%. Oh, man. I need the details. I need more details. The only Elgato I have is for recording gameplay, and it's not the best for what I paid. Who wants to debate me? I'll pay. $100, you can debate me. 2.7%. Wow, what a clueless waste of time. Strongman, do you ever listen or watch Dumb Money? No, I don't watch them. They, what was it about them? I remember they were shilling like Tesla or something. It just pissed me off. I'm like, I'm not going to watch that. I got the MV7. Don't need the higher tier. It sounds worse if you don't. Yeah, exactly. I think I'm going to go with the MV7. I need to figure out the adapter because I'm pretty sure I don't have a USB-C. They always make new USB plugins. Like, oh, now we got to make a new plugin and all the old ones don't work. God. All right, we got Dan and Gil feuding in the comments. You need an external audio autoface to use a higher end mic for a few hundred minimum. Yeah. I got to figure it out. All right. Let's see. I'll debate strong. Yeah, $100. Let's debate, bro. All right. Well, okay. I'll give you a $5 discount since you're a member. And you gave a super chat. So you know what? $90, you can debate me. All right. Thank you for tuning in. This is probably the last stream of the day. I'm going to go work out. Then I'm going to go to the pool with my kids. And that's my day. Like, subscribe, check out all my griffs in the pinned comment, and have a wonderful day. Why is this not ending? Is the stream still going? What's going on here? All right, let me try to end the stream now. End stream.